Kroger reported earnings yesterday, pre-market. The stock fell 5% but ended the day at 3% gain. How bad was their earnings and what prices should you buy this Buffett stock? This is KR's earnings snapshot compared to the results last year of the same quarter because every valuation metric uses the trailing 12 months. Revenues are up 8%. Net income is up 374%. Wow. But their free cash flow is down 75%. Profit margin increased from 0.34% to 1.49%, and free cash flow margins decreased from 3.48% down to 0.8%. EPS trailing 12 months gained, though, 33.49%. Why did the stock fell 5%? Well, because of the free cash flow. Remember, investors buy stocks for the money they're making, not necessarily the revenues. Although the EPS is higher. I say this quarter for KR is quite a mixed one. Not bad, but not good as well. I mean, I pay for EPS and EPS increased, but I also pay for the free cash flow and their free cash flow decreased. Mixed earnings, I'd say. Now let's look at what prices we should buy KR, this Buffett stock. But before we go to their valuation summary, let's look first at Buffett's holdings. Warren Buffett holds 58 million shares of KR worth $3.3 billion through Berkshire Hathaway. They actually reduced their holdings by 5.58%. Now we want to know why they bought the stock and what price should we buy the stock. Here is KR's valuation summary. Obviously overvalued. Only the historical price of free cash flow and historical PB ratios are good here. Like the discount store I screened, like Walmart, Costco, and Target. Obviously, the second metric is not the perfect metric to use here. So $5 fair value is not necessarily true. This is the only price when we're screening KR like the rest of the stocks, like the tech stocks, because their margins are small relative to their total revenues. Their markups on selected items or probably some items are very, very small. Anyway, I'll tell you my best entry prices for KR later, but I still think it's trading at a premium. I don't own the stock. I'm not itching to buy the stock. I wouldn't like to hold this long term, but I'd have this as a trade play. I don't think you should pay premium for the stock. Despite overvalued, I don't recommend a sell on this stock, but a hold. I think the moat is there and I don't see KR ever going away. This is Guru Focus's intrinsic value of KR, $37.04. Now, here are my entry prices for KR. I'd only recommend buying Kroger at this price range here, $39 to $43. This is where you start a position. This is based on KR's average historical PEs of 13.51 to 14.79. If KR is to trade again back to this PEs, then $39 to $43 would be the most reasonable entry price. $42 here is 2% dividend yield, 3% is at $28. I hardly think we'd get down that low, $28. Book value wise for KR is just too cheap, guys. 0.74 times book value. Let's look more into this stock. KR is now down 20.64% of the highs. Gives out an annual dividend of $0.84 per share, a 1.69% yield of the current price. They bought back 137 million shares in 5 years. This is probably why Buffett likes the stock, because they're buying back shares. Margins play around 1 to 3% of their total revenues. Revenue growth are at single digits. This is why you shouldn't pay premium for the stock. Only 28.87% payout ratio. If you're buying KR for their dividends, I think it's safe. Current ratio, Bad for the quarter, 0.76 only. We want that above 1. Their debt levels are somewhat manageable, I'd say. So yeah, I think for Kroger, I'd start a position below $42 so I get my 2% dividend yield. Overall, probably $40 isn't bad an entry. So yeah, I guess $40 for KR stock.